Hey, welcome back. This is Logan. We wanted to give you guys an update of what's going on in the world right now. Every quarter, companies have to come out and give out an earnings statement to Wall Street and to investors and say what their company has done in the last quarter and what earnings and revenue look like. So, Quint, how has this earnings season started and what does it look like so far?
Yeah, thanks, Logan. Your first of all, great description. Every quarter is kind of a scorecard, and earnings drive stock prices ultimately into the future. And so this earnings season in particular is very, very important because investors have really been on the fence with the economy and where things are going. Are we in a recession? Are we going into a recession? I've never seen it so almost divisive. The opinions of where things are going are just so strong.
Right.
I find it fascinating and overwhelmingly negative.
Yeah, it's most people are on the side of it is getting really bad and it's going to continue to get bad.
I'm glad you said that. There was a statistic that came. I know we weren't targeting to talk about this, but I think it's important. There was a statistic that came out a week ago by Bank of America. And they did a study of investor allocation. Allocation is stocks versus bonds.
Okay.
The general investor is underweight stocks, a level they have not been underweight since 2009.
Wow. So the bottom of the market.
The bottom of the great financial crisis, when people had basically sold out and gotten out of stocks, that is the equivalent to how people are positioned right now. Take that for what it is. I mean, if you're a contrarian, you're certainly open-minded at least to stocks going higher. But yes, the overwhelming consensus, it seems like, and from folks that we talk about for sure, is pessimism and negativity. This earnings report is so very important because we do want to hear what companies are saying about the previous quarter, how they're dealing with the price appreciation that they're facing on their input costs, how they're seeing the consumer handle things, and what they see. This is most important, what they see in the future. So the leading off all quarters is always the banks. And just like we thought, in fact, we wrote about this early prior to them reporting, we have kind of a feast or famine. So we have some regional and smaller banks that are struggling. As we suspected, with the banking crisis, money is moving out of those banks. Now, not all. This is fascinating, is we got a couple regional reports of some banks that are doing really well.
Right.
And with those stock prices down considerably, meaning all of regionals and small banks have been killed. I mean, their stock prices have just been crushed. Because some of them are going, hey, our business is fine.
Right.
Those stocks are recovering considerably.
But there's a big winner as well. I mean, there's
I'll get to that in a second. But Schwab even, and we've addressed this with many people out there. Schwab has a bank component. We're not part of the Schwab Bank. We're on the brokerage side. Investments in investments at the brokerage side, I have no issue with, nothing whatsoever. But the question surrounds Schwab Bank. Because, again, they're a bank. They have a banking asset component. They make loans, et cetera. And they came out and talked about their business being very strong. The stock price responded accordingly. So, yes, though, in addition to some of the anomalies in the small and regionals, we have the big winners, and that's J.P. Morgan.
Yeah.
J.P. Morgan is clearly the big winner. Deposits like never before, the best quarter they've seen, I think, in history. Billions in revenue, billions in profit.
Yeah.
I always find it fascinating when people tell me the world is ending, and I go, well, when J.P. Morgan makes $8 billion in 3 months, I don't think the world's ending. Like, That's a lot of money. They're and I know that's a big, bad bank, but there's a lot of companies that are doing that. They're making a lot of money. We will quickly roll through some of the more obscure names. I mean, again, there's winners and losers, right? Procter & Gamble out this morning. Great report.
Right.
They are able to pass their price, pricing on to consumers. Consumers still need those products. That's a staple, a consumer staple. You would expect that to be the case. That's why staples are doing well. Warren Buffett, doesn't matter the economy. People are going to buy Coca-Cola. That's a staple. On the flip side, AT&T, terrible report. Consumer driven. People are switching carriers. I mean, they're debt heavy, very debt heavy. IBM, challenging report, debt heavy. I mean, it's a good report, but the response wasn't great. Debt heavy. Companies that are significantly debt heavy are going to face a difficult environment because of the interest rates. We're going to quickly roll, however, into the big cap technology names. This is where I think it's going to be the most important. I have my views. I have my opinions. We'll just have to wait and see. But the reality is that what they say going forward, I think, is going to paint the direction for the entire market. I will say this. If you polled 10 investors, let's say I was included that, I'm going to say 9 would tell you that those reports are going to be bad. Now, I'm not going to say which one I am. If I'm the 1 or if I'm in the 9, I'll let you guess. But I'm guessing that a majority of investors are going to say those reports are going to be poor. There's an opportunity for surprise there for sure, no question. Inflation, still a hot topic, seems to be coming down. You're not hearing much about it in the headlines. Interest rates, believe it or not, there's now an 80% probability of another quarter point hike rate hike coming down the pike. The market's taking that in stride, though. The market is not, upset about that. The market seems to be eyeing what companies are doing and seeing how they're handling these interest rate hikes. And since they're handling them okay, that seems to be a positive. The one outlier you're going to start hearing more and more about, however, is China invading Taiwan. That's on the docket, maybe. I mean, it's been on the docket for like 20 years. But the reality is that they're doing exercises. They seem to be advancing in that manner. In my personal opinion, that would be a shock to the market in the short term. However, there will be many companies, I think, that would do very well in the midst of that challenge. I know this always sounds crazy. People are like, what are you talking about? Well, if Taiwan Semiconductor, one of the largest manufacturers of semiconductors, is quote-unquote under attack, that will bring a lot of technology stocks down very quickly. But then there's companies, kind of like the banking situation, there's companies in the semiconductors that are vertically integrated in the U.S., outside of Taiwan, et cetera, that are going to do very, very well. So, again, it's one of those things that we're hearing more and more murmurs about. It might happen, might not, whether we're drawn into that, et cetera. But listen, at the end of the day, there's always going to be something on the horizon.
Always, no matter what.
I mean, you've been here, now, 2 years?
Yeah, I've
And
seen
what
it.
is there, 20 different things you've gone through,
exactly.
right? So there's always going to be something. The year, I mean, if I told you all that was going on, you'd probably think, what, the market's down 20? I mean, really. If I told you everything that's going on with inflation and CPI and the earnings and, I mean, you name it.
Wouldn't be positive.
I'd be like, yeah, well, we're down. Well, guess what? S&P's, 7-8% for the year. NASDAQ, almost 20. I mean, it's a fairly good year so far. So, and it's a long year ahead. That's for sure.
Yeah. Well, we'll watch out for those earnings. We'll get back to you with some updates once we see the data come out. But everyone have a great weekend out there.